A comment on my channel got me thinking. Did Gordon Brown screw up the property market? Did the last Labour government make the property market better or worse? Now, that's an important question because with Sir Keir Starmer's new Labour Party promising to put the property market right, promising to reform planning and build 1.5+ million new homes, are we just going to watch history repeat itself? And in case you don't know who I am, I'm William Gale, and I've spent since 2012 building a UK-wide home buying company, British Home Buyers, and a nationwide estate agency, British Home Sellers, that has dealt with over 13,000 transactions, totaling about £3.3 billion of property. So I'm naturally sort of motivated to understand this stuff. So let's get into it. In 1997, a fresh-faced chancellor called Gordon Brown said this: "I will not allow house prices to get out of control and put at risk the sustainability of the recovery." Now, at this time, there was a lot of hope from what they coined at the time, New Labour. Sound familiar? Anyway, after defeating John Major's Conservative government, a Conservative party that had been in government for 18 years, a Conservative government that many felt at the time had held power for just too long. Again, all sounds very familiar. In fact, at the time, Conservatives saw the biggest defeat since 1906 at that moment. So it's honestly crazy, the parallels of now to back then. It's amazing how cyclical government is, the same promises and sadly the same disappointments. So what happened? So did Gordon Brown end up keeping house prices under control as he promised? Well, to start with, let's just watch this.
"I will not allow house prices to get out of control and put at risk the sustainability of the recovery." That under this government there will be no unsustainable dashes for growth, no out of control booms, no risk taking with inflation, no quick fix.
This is the biggest bust since before you were born.
Well, let's see.
Well, no. To recap, between 1998 and 2008, UK house prices rose on average more than 300%, exceeding salary inflation. Whereas in 1996, the amount of take-home salary that first-time buyers would spend on their mortgage was 17.5%. By 2008, this had risen to 49.3%. During the same period, the UK population grew annually by just 0.64%. Based on supply and demand alone, there was no logic for this dramatic price inflation. Just look at what real house prices did from 1997 to 2007. They skyrocketed until the financial crash in 07-08. So how did this all happen? I want to simplify this by breaking it down into bullet points. It started with, firstly, the deregulation of financial instruments, flooding markets with cheap credit. Rather than me explain the effects of this, it's better you watch this clip from The Big Short.
Okay, so here's how a synthetic CDO works. Let's say I bet 10 million on a blackjack hand.
10 million because this hand is meant to represent a single mortgage bond. Okay, Selena has a pretty good hand here, showing 18, dealer showing 7. That's a really good hand for Selena. Good odds. In fact, her chances of winning this hand are 87%.
So, my odds are good. I'm on a winning streak. Everybody in this place wants to get in on the action. How could I lose, right?
Now, this is a classic error. In basketball, it's called the hot hand fallacy. A player makes a bunch of shots in a row. People are sure they're going to make the next one. People think whatever's happening now is going to continue to happen into the future. During the real estate boom, markets were going up, and people thought they would never go down.
So people who are watching and think that I won't lose will make a side bet. Now this is the first synthetic CDO.
I love Selena Gomez. I bet you 50 million she wins, and I'll give you a 3-to-1 odds. 3-to-1 odds? Okay, I'll take that bet.
Now, somebody else is going to want to make a bet on the outcome of their
Betcha
bet.
50 million she wins.
That will lead to synthetic CDO number 2.
Hey, I bet you 200 million that lady in the glasses wins that bet.
She probably will win. So I want a great payoff.
How about 20-1?
Deal.
So then all that extra liquidity created out of thin air piled into the property and stock market, driving up prices. Within property, all this extra money made the private rental sector popular as an investment. In the UK, buy-to-let properties grew from 9.4% of property stock in 2000 to 19% of a considerably larger overall property stock level by 2014. So this created a social economic chasm between property owners and those yet to get on the ladder, as fewer people in the form of landlords built up bigger and bigger property portfolios because they were such good investments. In effect, you didn't just have people moving, people getting on the housing ladder, competing with one another, but also a dramatically growing number of property investors using property as a speculative investment, spiking competition upwards. So yes, it's easy to assume that over that period, that this boom in prices was driven by not enough property being built and a growing population like it is now. But as I mentioned earlier, our population back then was only growing 0.64% a year, nowhere near the levels we're seeing right now due to immigration. So even though Gordon Brown's whole mantra, as you saw, was no return to boom and bust, he kept saying there would be no return to boom and bust economics. Year after year, he kept that message. So ultimately, as the economy started to bust after years of booming, everyone lost faith in him. Ultimately, Gordon Brown came to admit this, but what does this really all come down to? Short-term versus long-term economics. Politics is a short-term game, which is why Sir Keir Starmer's message on country first, party second is so important in my view.
We will show that. We've changed the Labour Party, returned it to service, and that is how we will govern. Country first, party second.
And I hope he keeps to that, because ultimately all we've been taught and all we've learned is politicians don't keep to their word. Maybe because it is far easier and more popular short term to deliver a property boom, deliver a short-term sugar rush that boosts the economy at the expense of long-term stability. A boom that puts money in the pockets of those of us with assets, but anyone not on the property ladder that doesn't own assets, it ultimately leaves them all worse off longer term. In a sense, we all witnessed this over the COVID property boom. The moment interest rates dropped and a stamp duty holiday was imposed, the property market was red hot. Not a problem if you own a property or if you manage to hop on the ladder at that time, but those that don't manage to see their aspirations fall further and further from reach. To illustrate this, let's look at data that measures the performance of 9 different chancellors over the past 30 years. Comparing Brown's performance. You can see how on paper Gordon Brown served over a period of incredible growth in property prices, increasing over £1,700 a month over this time. But then you can see the effects over Alistair Darling's period after dealing with the financial crash. The same can be seen with Rishi Sunak over the pandemic when he was Chancellor. Great to see at the time, but ultimately passes a hospital pass to the next Chancellor, Jeremy Hunt. I think the most staggering display of statistics is this. Just look how house prices, mortgage debt, property equity just skyrocketed over Gordon Brown's time, which might seem great, but it's a true display of short-term economics at the expense of long-term stability. The biggest issue we have is a misalignment of incentives in politics. Politicians that need to win, essentially a popularity contest, to get into power, creates an incentive to say what people want to hear, to do things that might make a big enough portion of people's lives better in the short term, but at the cost of not making the right longer term decisions that impact future generations positively. Do we think the new government will buck this trend? What do you think? Anything I missed? Any opinions? I'll see you in the next video up here.